Hey guys, welcome back to the channel. My name is Evan and this is Sense or Sense. And today I come to you for a couple different reasons. The first reason is to talk about a little bit about what's going on in the markets right now. I know a lot of you are probably concerned about what's happened and Trump instituting his tariffs this week, and as I am. Obviously the markets are way down. They're going to probably go a bit more down, if not a little bit more than a bit more down. But I wanted to bring you my perspective being a 25 plus year trader as well as an investor. And I wanted to tell you guys that ultimately, if your timeline is long term and you're an investor and you're adding to your 401k, you're adding to your retirement accounts, you're adding to your investment accounts, and you're looking at this from a 10-year plus time horizon, I think you're going to be just fine. You know, there hasn't been a period of time in the U.S. in the last 100 plus years that has been negative for the markets overall. They call the lost decade 2000 to 2010, where the markets were essentially flat during that time frame. And we might be in a situation where the markets might stay flat or go down for a couple of years. We've had a long run of really good investment years over the last several years. And in fact, I was just thinking about this morning. Most people under the age of 40 who have invested, let's say in their investable career here, maybe in the last 10 or so years in retirement accounts and other accounts, have probably never even seen a true bear market. They've seen, obviously downward movements in the markets due to due to the COVID recession. It was a very sharp spike down. And also in 2022, we had a correction. But ultimately, there haven't been sustained periods of time of a year or more where the market has really been down for long periods of time. And then you get into the second year and it's still down. And you get into the third year and then it just starts to recover. I don't know if we're going into that right now, but we're kind of overdue for that. And one of the key factors that I found in today's market was when I got up this morning and I started looking at the market, what's going on out there. One of the things I remember when I used to trade full time back in my hedge fund, and this still holds true today, the VIX, the volatility index, whenever it spikes multiple days in a row and it goes significantly above 30 for a period of time, and it's currently, it got to about 30 yesterday on April 3rd, 2025, and today it looks like it's getting up to closer to 40 at the market open for April 4th, 2025. Whenever you get spikes significantly above 30, this indicates fear and panic have taken control of the markets. Usually, fear and panic take control of the markets for a short period of time. Then you have institutions and retail investors step back in and kind of stabilize the market. And I think that may be what might happen before the end of the day today, Friday, April 4th, 2025. You also have options contracts expiring today. You have a lot of options contracts that are way underwater, and typically things revert to the mean somewhat when on expiration days. So that might help a little bit as well. But ultimately, we may be in this for the long term. We have a president now who is basically rolling back tariffs to over 100 years ago and seems to be entrenched. And we'll see what he does over the next several days. Some of these tariffs don't take effect until April 10th, 2025. We'll see if he negotiates anything, he pulls some from the table. We'll see what goes on. But ultimately, I think for the time being, we're going to see obviously lots of volatility in the market. We're going to see our accounts going down. You need to understand something. It's all about time horizon and all about perspective and all about your risk. So as long as you're in it for 10 plus years or more, like I am, I'm not too concerned about my long-term investments. I've already positioned myself such that my risk was already much lower than most people at my age, just because I saw this coming and when Trump was elected, and I kind of assumed that some craziness would go down with him and the tariffs and whatnot. And ultimately, I've kind of made myself a bit more conservative for the upcoming years. But by conservative, I still have way more than half of my net worth in stocks and the market. So it obviously concerns me. But I wanted to let you know also that, ultimately, if you're trading, especially on margin, or you're trading in general, you need to be extremely careful in these markets. A couple of days can wipe out large portions of your account, 20% of your account, 30% of your account. I saw the interview with Restoration Hardware's CEO a couple of days ago, where he was on camera, and they on his conference call, and they released the earnings right as Trump was coming out with his tariffs on Wednesday, and his stock proceeded to sink by the end of the day yesterday, Thursday, April 3rd, by over 40%. And he was quoted on camera as saying an expletive and basically saying, "Oh, insert word," and reacting to the fact that it was pretty crazy. So that's the kind of volatility that we're seeing here. Ultimately, I want to bring some clarity to this. I want to say, as a long-term trader and investor, stick with your guns. Make sure that you're diversified. Make sure that you have the money set aside for the short term. And by short term, I mean, multiple years, a couple years. If you're investing, you should have a couple years worth of safety net in those investment accounts, in my opinion. And make sure that your emergency account is set up. Make sure you have all the other things in place if you're going after this market right now. And there's no harm, foul done by saying, I'm going to sit on the sidelines with additional cash that you might get. In other words, your 401k, anything else like that. You can make that decision, but just understand, I read a statistic this week also that said that ultimately that you miss the top 10 days of the market over a 10-year period of time, you're basically giving up more than half of your overall returns. You give up the top 20, you're giving up almost another half of those returns, and 30 and so on was equally as bad. So, if you can't time the market. You miss some of those really good days, you're going to obviously miss some of the really bad days, but the better days, the best days in a period of time really make up a large chunk of your overall return. That's one of the reasons why I say to stay put. So that's what I wanted to bring you today. I wanted to say stay the course, be careful, don't invest unnecessarily in things that you don't need to. Don't take any more risk than you need to, but ultimately be very careful about how you approach this market. It's going to be very volatile. And remember that oftentimes when blood runs in the street, there's opportunities. Thanks for tuning in. Talk to you next time.